Hey everyone, welcome back to the Mark Loeffler Experience. Today we're going to be talking about better dwelling because they seem to be getting a lot of press lately. They're all over my social media pages. They're out there and they're making their predictions. When I read these things, I'm always like, okay, what's behind the curtain? Who owns it? Do they have a political agenda? I mean, I don't know if you guys are like me, but when I see news articles, depending on where they're printed, well, I mean, let's be honest, readership of certain newspapers or magazines, they fall to a political party. So therefore, they're not going to write articles that are going to make their readers unhappy. They're going to write what their readers want to read because that's what smart people do, right? Because if they do that, then people will continue buying or reading online or paying for their online subscription. Better Dwelling seems to be an independent company that's owned and operated by Stephen Panwazi, by the way. I'm going to reach out to Stephen and see if I can get him on. Like, he seems to be a stats guy too. I'd love that. If anyone knows Stephen Panwazi, I'd love to have him come on the show. But anyways, let's go into top stories for Canadian real estate correction forecasts and our chat with Paul at Parliament. This is this week that they're talking about, right? So they spoke to the Standing Committee on Finance. So that could or could not be a good thing, obviously. Canadian real estate could be in for a correction or worse. Canada has the second most overvalued real estate of any advanced economy. Canada just saw the biggest Q4 for residents permanently leaving since 1970s. I do know a lot of people who are leaving as well, young, educated people. So another one was that Canada's real estate supply shortage is being declared a myth in pricey markets. Canadians expecting to buy real estates this year fell by 1/3. So that's a lot of buyers showing up. RBC risk model says that real estate prices can fall by 30%, no growth expected. Canadian real estate wealth went vertical, and that's a problem. I've said it on here, like a 10% growth in a month is ridiculous, unsustainable, and is not good for the general population. Canadians are pumping the brakes on mortgage credit after hitting 103% of GDP. All that debt is going to fuel, obviously, inflation, which is what we're seeing out there. They're going to buy things. They're going to buy other properties. They're going to buy cars. They weren't going on vacations. Now they're going on vacations again, right? This week's top headlines. So we're Monday now. So let's just delve into a couple of these. Obviously, Canadian real estate prices are linked to interest rates. I mean, we've talked about this on this channel. People don't care what they pay for their house. I know that there's going to be some of you who disagree with me. They care what their monthly payment is. And when interest rates are 1%, their monthly payments are going to be super low. So obviously when interest rates climb, their cost to own a home is going to go up. Just simple math. So they'll be like, oh, I can afford $2,000 a month. Therefore, that $2,000 a month is going to buy me $500,000, not $600,000 now. Okay. I'm going to look at $500,000 properties. And by the way, though, all I'm just going to put this out there is if you're one of the third who are going to buy real estate and not going to buy it anymore, I think if you have a long enough term time horizon, this is all just going to be waves, right? Buy when people are fearful. Be greedy when people are fearful. So, and here's the thing, like, we've been in such a real estate boom since 2008. Like, we had about a 6-month period where it kind of dipped, and then it's been pretty steady other than a couple of blips along the road, but it's been pretty steady rise. So a lot of people haven't seen a real estate crash in a long time. Could this be the time? I know a lot of people think so. Should we all be getting out while the getting's good? Then we have, they made their opening statement to Canadian parliamentarian. I thought this was pretty interesting. This is what made me look behind the curtain about who owns Better Dwelling. I was like, is it like very liberal? The guy's from BC. But anyway, that's not really the point. I was just wondering, because they are speaking to Parliament, how independent are they? Inflation is fueled by money printing, by the quantitative easing, the low interest rates. So BMO estimates 1/3 of existing home sales are accessed due to the low rate stimulus, right? People said, well, now I can buy because I have a low rate. So sales are just off records high. Obviously, we don't need stimulus in the economy right now. Although, I'm going to tell you, if they raise rates too fast, then we're going to go into a recession. Low rates don't stimulate selling because, at some point they do because prices get high enough and people say, ooh, I'm out, I'm good. But like, again, I didn't sell my principal house because where would I go? I'd have to buy something else, or I'm leaving the country. Not happening, right? The one thing I did see in here that I was like, ooh, I want to find out more. Where are they getting the data? A third of existing home buyers are investors. In Toronto, a quarter of housing is bought by investors. Now, I've seen this bandied about on Better Dwelling before. They're not citing anything. I'm just like, okay, I want to know where they're getting that information. It may or may not be true. I don't know. I don't believe everything I read. I don't believe everything you hear on YouTube either. This is just my opinion. But I just want to know where that's coming from. Is it the fact that people are buying to flip, or are they buying to rent? I'm curious. I am curious right now to see what happens. Obviously, when rates go up, I think it's a better time to invest. It's easier for me to buy when it's more sustainable at flat or no increases. Because of the style of investing I do, where I go in and I improve the property, get the rents up, better management issue for me or whatever, I'm fixing problems, it's way better for me to have a steady as she goes than stupidity. To review, the Bank of Canada lowered rates to create inflation because they were worried about deflation when COVID happened, because again, nobody was going anywhere. Nobody could spend money. You couldn't go out to restaurants. You couldn't travel. So they were worried about deflation. Billions and trillions of dollars have flooded the world economy to generate more inflation. Now they think it's external factors driving inflation higher. And I do like this. We don't need Nancy Drew to figure out where the inflation came from. We've said it here so many times. Every guest I've had, we all know what caused the inflation. Like, it's not the fact that there's a war. Does that hurt? Does that help or hurt? Well, it hurts a little bit. That's not the reason. And we talked about the chip shortages in cars. Why is that? Because when COVID happened, these car manufacturers said, oh, we don't think we're going to sell a lot of cars. So they canceled their orders. And then when they went back to get them, they're like, oh, well, we filled them somewhere else. I'm really liking this Better Dwelling. I mean, I'm just hoping we don't see Canadian real estate prices linked to interest rates. Here's a little chart for us here from BMO. So this is obviously the growth. 30%. Like, that's just ridiculous. And by the way, again, they're talking about Canadian real estate, and they do have another article where it's very specific to provincial, which I did like. The other one was, people are leaving Canada. Oh, we talked about that a little bit already. You don't have to. So, here, this is the first thing I've seen that supply is keeping up with demand or outpacing it. So population, this is BC and Ontario, the numbers. So population grew by 7.6%, dwellings grew by 7.2%. So over the same period. So that's pretty much keeping up with demand. You can kind of see, so in Squamish, like, it outpaced. Kelowna outpaced. Victoria is about similar. BC in general. Vancouver, Prince George, it's in major population centers with high price of real estate, it's keeping up or expanding it. So my supply theory could be speed, water. It could have just been interest rates fueled a debt-ridden real estate buying because they needed to put money somewhere. And that's just kind of what might have been. Ontario residential real estate, this is another BMO report. So BMO is probably one of the more hawkish banks out there right now, just putting that out there. Basically, they didn't go into town by town and city by city. The population grew from 2016 to 2021, 5.8%. There was 6.2% growth in the province's housing. I still think we're underpopulated in places like Toronto, and I think we can see densification, but we are seeing that obviously in places like Hamilton. We're starting to see more towers come up. But obviously, we've talked about this a lot on here. The G7 says, we have one of the fewest homes per capita. One notable mortgage expert, I'd like it when they say who they are, so we can go see, again, do they have an agenda? What's going on? They're seeing people aren't selling because, again, when you sell, you have to go buy something else. And it's expensive in Ontario, Toronto, to buy something because you have land transfer and all this type of stuff. But they're leveraging for additional homes. They're buying cottages. They're buying investment properties. So, again, it would be silly to sell while home prices are rising at a pace of their annual income every 2 months. That's probably fair. Like, if you're looking and, you make 50, 60 grand a year and you're making $200,000 on your price growth every year, and again, it's hard. It's a tough thing to do. So as interest rates rise, a falling credit stimulus is expected to slow demand. At least one bank expects this to lead to almost no price growth, while another says this should lead to more listings. You know, it's interesting, right? And obviously I live in real estate and I breathe real estate every day. We have one property that didn't sell on offer day. We are seeing less showings. I mean, a third less buyers are out there. It's just an interesting time. So if you are waiting to get into the market, now might be your time. You know, even if again, like we talked about that crash last week, even if we have that takes us back to December's numbers. I digress. This video's already been too long. So you know what? Like and subscribe, comment down below. You know, let me know what you guys think are happening. If you know Steven, anyone knows Steven, love to have him on. Anyways, thanks everybody. We'll catch you next time.